Good morning, everybody, and welcome to the midweek live market update from Smack the Markets. So before we get started, as usual, if I can ask you just to take a quick read through the risk disclaimer and make sure that you're comfortable with it. In brief, what we're saying is that we're not licensed to be able to give advice. Any markets that we discuss, any opportunities that we talk through are purely for educational purposes only and purely only our opinion on the markets at the moment. Morning, Miles. So please make sure that you're comfortable with these terms before continuing on the webinar this morning. Morning, John. Fantastic. Thanks for that confirmation, John. So this morning we've got some, again, rather interesting developments in the markets. Markets remaining choppy. NASDAQ managed to put in a sterling performance yesterday, as did the Dow as well. Dollars continuing to strengthen, and the US stimulus package comes one step closer to final conclusion. So this morning we've got, again, fairly light news day today. Not a great deal on the data slate, and a quiet morning up until lunchtime. And then we have 3-star US dollar, and we've got, I suppose, the big event today is the Canadian interest rate decision at 3 o'clock today. Strengths and weakness side of things, we've got strength in the US dollar, strength in Great British Pound. We're also seeing the euro strengthen this morning as well. On the weaker side, I've got the yen, the Aussie, the Kiwi, and the Singapore dollar as well. Morning, Michael. Hi, Andrew. So before we get into the charts, I just want to tell you about next week's session. So we're going to do things a little bit differently next week. We're not going to run this session live on YouTube. We're going to run it as a live webinar. So it's going to be a slightly different format. So we're actually going to take a look at the 4 trading strategies that we run and that we operate. So we'll work through those so that we're all clear on exactly the 4 different setups for 4 different market conditions that we're looking for, and then we'll go into the live markets and look for those markets where those opportunities are possibly best to apply. So the session, as I say, will be run as a webinar. In order to attend the webinar, you need to make sure that you're on our mailing list so that we can mail you the registration details to register for it. So the place to do that is if you come across to our website and scroll down to the bottom here. Right down at the bottom, you'll see join our mailing list. So if you put your name and email address in there and hit subscribe, what we'll do is on Friday, you'll get an email with the registration details for next week's session. And if next week's session is successful, then we'll actually continue to run these as webinars because we've got much more flexibility running them as webinars. And if you're on the mailing list, then it makes sure that you're going to be included in those in the registrations each week. So as I say, it is limited to 100 people. So it's the first 100 people that will be able to join. So make sure you get yourself onto the mailing list, and not only for that, but you'll also get be included in all of the mailings that we send out. Morning, Martin. Okay, so let's take a look at the live markets, and let's have a look at what's going on. So from Monday, let's just talk about what we were discussing on Monday, the opportunities we were looking at, and what actually happened. So first of all, if we have a look at the Dow, this is the 4-hour chart on the Dow. On Monday, what we were looking for was for the market to break through this 31,600 level. You can see we've got a significant level on this market, and we can see where the market opened up. It gapped up over the weekend. Let me zoom into that. So we can see that it gapped up over the weekend above that level and then retraced underneath it. We were looking for the market to actually take out this level again and looking for new highs. And as I said, if the market gets through this level, the next trading window is up to 32,000, which is exactly what happened. So we've had two tests, well, three tests now, arguably here of these highs, and now the retracement back again. I think remember that these stimulus packages add rocket fuel to US indices, and a lot of the money ends up being ploughed into index markets, or into stocks, I should say. So again, looking at where the market is at the moment, the Dow doesn't really sort of have an awful lot of structure where it is. It's in between two significant sort of trading windows. From a technical structure here, we've got the market pulling back into fair value area, and I wouldn't be at all surprised if we start to see 32,000 tested again today, and possibly moves above that throughout the remainder of the week. So I'm bullish on the US index markets, and continuing to look for opportunities long on these. Now, again, the only decision point that we've got in the long side here is that 32,000 price point. Now, if anything comes out to disappoint the markets, then we've got key support at 31,600. Remember that. That's quite a significant level here in the market. So let's come back, and the second market that we discussed was silver. Morning, Patricia. Now, what we're looking for on Monday really was a continuation of this short move on silver. We're looking for the silver and precious metals, in fact, across the board to continue lower. It did come up against a significant price point at this $25 level. And as you can see, we've had a double bottom in here with divergence. So two tests of the low, two tests of that significant level. Again, if I can just sort of zoom out of this, you'll see the significance of the level, the structure point here. So we've had the two tests, we've had divergence on those on the second test, which indicates strong buying momentum, and the market has now moved up to the next structure level, which is 26. And you can see that we've got quite a solid decision point around there. So where does this go from here? Well, again, silver is looking rather resilient compared to gold. And again, I think here, if we get above 26, we could be looking for a completion of the next trading window to the long side again. But overall, I'm not liking the overall sort of positioning of this at the moment. I think there are better markets and better charts to be trading, and silver does tend to be a rather sort of volatile market. It's nice when you get positioned in it and it runs, but of course it can be quite choppy on the whilst it's sort of not moving. Now, gold, I should add, is sort of setting up. It's poised. It's retraced back, similar to silver here. It's retraced back into a significant level, which is a significant sort of sloping trend line, which is coinciding with that $1,700 level for gold. So just sort of be aware that we may see some continued weakness on gold, and we may well see sort of silver continue to the short side, and that means seeing resistance here at the $26 price point. So so silver hasn't played out as we expected so far. Euro dollar, again, this market here was one that we discussed for dollar weakness. We were looking at US dollar strength, we were looking at the euro weakness, particularly as the market took out the 120 level. And in fact, the trades that we've had in the trading room this week have actually been dominated by euro dollar. So we've had a few trades here on euro dollar trading this market short. We had one overnight as well, which was on this setup here. It's actually a setup on the 2-hour candle, and which we don't have a 2-hour chart here on this particular platform, but you can see the sort of turnover here at 119, the 119 level, and the market sort of came down. It came down overnight, hit 1-to-1, so we peeled off risk now, risk-free, or some traders have actually booked full profits. The market is retracing now. We've got quite a bit of strength coming into the euro at the moment, so we're seeing a bit of a move higher on this one. I think longer term, there's a couple of ways you can play this. You can either take the money off the table, that's all good, it's a nice profit, or leave some of this open for a longer run. And the reason I say that is this market may well continue to move to the short side. We've still got plenty of distance to go to the short side. You can see underneath the sort of 119 area, we've got, again, if I can sort of just zoom out of this, we've got the next significant sort of level is down here to around 118, and then all the way down here to around sort of 116.5. So there's we're in short trends across the board here, and again, I'm just seeing here if we can actually sort of leave a piece on the table to take advantage of that. Okay, so those were the markets that we discussed on Monday. They played out sort of quite nicely. Apart from silver didn't do as it's told, but 2 out of 3 isn't too bad. So coming forward into the remainder of the week now, where can we focus our attention? Well, I think Fergal's actually sort of posted one of the trades out there. So Great British Pound against the Swissy is broken out, and that's moving quite nicely now to the long side. We're just getting a slight retracement back on that one, as well as a lot of those Swissy markets have broken out. So if we just have a quick review of the pound Swissy. So again, we've got strength in Great British Pound this morning. The Swiss market is showing up as weak, and the weakness is creeping in as the morning's progressing, and we're also in the context of quite a nice long trend here. If we come down to the lower time frame, you can see that we've had this sort of consolidation overnight, and again here on the lower time frames, 15-minute chart, we've got the quite a tight consolidation in here, with a nice breakout opportunity higher. So the market's sort of broken out. It's just sort of drifting back into support, and it's going to need to get through this sort of support area in order to, which has been resistance, which is now going to be support, of course, which may well give you opportunities to get back in again if you've actually taken profits here, or indeed if you haven't got positioned on the trade and you do fancy something like this yourself, then again here might be a place where you can bet maybe a tighter position on this market. Overall, I think the indicators looking sort of bullish. So, and I think the Great British Pound market is one of the better ones to actually look at today. So whilst we're on Great British Pound, let's just have a look at some of the others. So if we have a look at pound yen, now yen is one of the weakest currencies today. Again, we're seeing some nice moves here. Trend structures looking very reasonable here on the 4-hour time frame. Again, we've got convergence on the indicators as well. So just coming down the time frames, there's areas here where to look for sort of retracements and possible opportunities for positioning. And you come down to the 15-minute time frame, and again, we can just start to see some evidence of some structure coming into place here. So again, we could start to look at pullbacks into these moving averages similar to what we have here, and look at sort of the momentum setup, possibly around these sort of areas. So Great British Pound against the yen, I think, going to be on the watch list today, on the stalking list today, again with a lot of these pound markets. Now, one that Great British Pound against the US dollar, that one's going to be a little bit challenging because we've got two strong markets against each other. So we're not likely to expect that to move a great deal. But what we could look at is Great British Pound against the Caddy. Now, the pound, this has got strengths and weaknesses supporting it. The Caddy isn't particularly weak, but it's more neutral today. So we've got a strong against neutral market, which is better than two strong markets. So again, you can see. Well, let's just take a look at these higher time frames first of all. If you have a look at this on the weekly, we can see that the market is actually sort of breaking out of a range, and we just pulled back into the top end here of this range. And you got this week's candle. You can probably sort of see that there. Also coinciding with the moving averages, which are now sort of opening up, forming, demonstrating we might start to be getting a bit of a trend here. Again, you've got the indicators all supporting the move, with a strengthening move as well. So we're only halfway through this week at the moment, so it's a little bit premature to take on board this candle. But again, just trying to highlight how things are starting to look for the pound caddy. And of course, this is breaking out of a range, indicating that it could be potentially much further for this market to go if this trend is going to continue. Now, of course, you come down to the daily time frame, things don't look quite so clean because we've sort of come through the moving averages, we've come sort of through the sort of trend structure here. But again, you can just see that the level here has been bounced. The market's tested this level pretty much on the nose, and again, we've got sort of buying action coming in. We start to come down the time frames, and again, the price action here, whilst it's not always beautiful geometry, it's all indicating as strong. So we've got bullish price action here. Even at the moment, the market is breaking through previous support and resistance, as we can see through here on the 4-hour time frame, and actually breaking out to the long side. So starting to come down to the lower time frames, again, we can start to see that we're getting some market geometry coming in, and we're also getting some good convergence as well. So I'm liking this, and I'm thinking, if we can get some sort of nice setups on here on these lower time frames, then we could get potentially sort of positioned into a much longer running move. So this is that was the 1 hour. This is the 30-minute, and I think the 30-minute even down to the 15-minute starting to look sort of much nicer here, and potentially markets which we could start to keep an eye on. So again, come down to the 15-minute chart. We can see that the market is back into the zone at the moment. Haven't got a setup at the moment, but we're coming back into that area. So this may not, we may not get a setup now or in the next sort of hour on this, but if this market continues in the direction that it's going and continues to develop, then these trends are just going to start to look better and better as they establish, and it could be an area to consider for maybe a longer term move. Okay, so other markets that we've got on the watch list. Let's have a look at dollar yen. So again, if we're going to look at straightforward strengths and weaknesses, then we've got dollar yen, which sits in that place quite nicely. Let's come up to the daily. We can see that we've had a nice retracement yesterday. I mean, ideally from a daily perspective, a retracement back into sort of, well, as I was kind of mentioned earlier in the week, even some sort of back, could get some back into sort of 107, we have 107 and a half even. And that sort of brings it back into fair value. I don't think we're actually going to see that type of retracement at the moment. So we might have to contend with something like here, like on the 4-hour time frame. So we're starting to see some sort of development here. I would look at maybe breaks above these highs. So you can see that we've got a couple of highs there on the 4-hour. Let me just zoom into that. And again, you can see these highs here where we've got these doji candles, and this one sort of testing these highs. I'd look for above that level, which is just above the 109 area. So if we can get a break above there, then we could look for another leg long on the dollar yen. As I say, we've got strengths and weaknesses fully supporting that market this morning. So again, even if we come down to the 1-hour chart, again, you can see these two highs. So again, we need to see the market sort of find support, come back up and take out these two highs. That's what we sort of start to need to see. So next markets, what else have we got here? So again, if you've got markets that you'd like to take a look at, then pop them into the chat and we'll take a look at those as well. In the meantime, I'm just going to drag up Cad yen, because Cad yen is back into fair value and looking sort of quite nice. Again, if we sort of just take a look at this on the higher time frames, you can see that the market sort of pulled back into this nice consolidation here on the 4-hour time frame. Again, we've got the weak yen supporting this long. So weakness in the yen. The caddy is not, as I kind of mentioned, the caddy is not particularly strong or weak today. It's more neutral. But again, a break above the high here could cement a nice bottom here, a nice base here for our stop. And again, if you start to come down the time frames, just got a nice consolidation starting to form here on the 1-hour time frame. So in actual fact, if we just come down to the 15-minute chart, we've got some smack the markets pivot points just on this high here. Let me just put a level in there. So we've got smack the markets pivots on that level, which is London timing pivot points. And again, if we just pull back on this, you can see that that actually coincides with these previous lows and previous highs. So that's quite an interesting level there. So from a place to get long, a place for entry might be more prudent just to wait for the market to take out this level. And that could give you a couple of opportunities. We could actually start to look for, then could start to consider, well, where would the stop be? Because at the moment, you'd probably be looking at a stop down here. If you could get a tighter entry, a higher entry, you might be able to look at a stop underneath these two lows, this low here and this low here. But in actual fact, if we actually get the market to retest this level, maybe sort of consolidate underneath this level, there might even be a better, tighter stop opportunity as well. So that's the sort of setup that I would be looking at there for Cad yen. So that's got a little bit of work to do, but it's moving in the right direction at the moment. And this, of course, is going to be just above this high, is going to be above the 4-hour consolidation. that we're seeing there too. Okay, so Fergal, we're on to Cad Swissy. Let's have a look at the Cad Swissy. And Michael, yeah, we'll have a look at Aussie Kiwi. I actually had a look at that this morning. Yeah, I can see exactly what you're looking at, I think. On that 4-hour chart, I think you're looking at, Michael. We'll come to Aussie Kiwi in just a sec. So, Cad Swiss, again, looking nice. So let's have a look at this on the higher time frame. So again, similar to the Cad Yen as well, starting to look very nice as a sort of turnaround. So I mean, of course, if we got you got two opportunities here, probably Cad Swiss or Cad Yen, whichever one is closest to setting up. Let me just zoom into this. So I think the price action is a little bit cleaner on the Cad Yen, but again, this one's starting to move. That Swissy really starting to weaken off, as you say. I agree with that. We had some nice trades on these Swiss markets, didn't we, last week? Particularly Euro Swiss. So again, here very similar. You get a breakout above the high here. So again, you're looking at that sort of 4-hour setup there. In actual fact, it's a very nice 8-hour setup. If you have 8-hour charts, and down here on the lower time frames, you can see the detail of it. So breakout above the high. Stop location looks, the best stop location looks underneath the low at the moment. So looking very nice. So again, we've got quite a few here to keep on our radar this morning. So let's take a look at the Aussie Kiwi, and let's make this one the last one, so we don't go on for too long. So let's have a look at the higher time frames. This one, again, I was having a look at this morning. We got both Aussie and Kiwi were weak this morning. The Kiwi is actually strengthening slightly, but there's not a great deal in it on the across the board. They're both very sort of flat and very sort of neutral. So if we could get a strengthening here of the Aussie, which I would say that the Aussie typically is more stronger than the Kiwi at the moment, then again, a sort of breakout, some kind of breakout along the top here could be rather nice. Stop location, I think we need to be looking at possibly something under here. I mean, I think the most technical and conservative is underneath this low here, but that's a very wide stop. So probably if this sort of develops, maybe we could see some kind of sort of tighter stop location under here. Let's just see how this actually looks on the lower time frames. So yeah, again, we can see this consolidation. I mean, another way to play this that we often like is to wait for the breakout and then actually capture the pullback, particularly if the stop location is quite a long way away. So that's a tactic that we like to do. Wait for the breakout. You know, these strong levels often get retested. There've been significant resistance in the past. Very often when the markets take these out, they rarely just continue going in the same direction without looking back. Very often they do come back and bounce off that level, and that's the time to jump in and get a tighter stop on it. But yep, looks very nice. Another one to keep on the list. Okay, so let me just remind everybody who's joined since we started. Next week's session is going to be slightly different. We're not going to run it on YouTube. So in order to attend next week's session, you'll need to register for a webinar. And we're going to run this a little bit different sort of format. So it will be as a webinar. We're going to take a look at the trading strategies, the 4 trading techniques that we use, take a look at the detail of that in a little bit more. And then we'll go into the live markets and see what the best markets are for those setups. So in order to attend the session, you need to make sure that you are registered on our newsletter in order to be able to receive an invitation. In order to do that, just pop along to our website, scroll down to the bottom of the home page, and you'll see in here where you can join our mailing list. So pop your name, email address in there, click subscribe, and then on Friday we'll email you the registration details to register for Wednesday's session. So if you register for this, then we will we'll automatically send you the invites for future webinars that we're going to be running, and we're likely to be running the Wednesday live sessions as a webinar event on Wednesdays going forward. So it's if you want to attend live, it's important that you register for the mailing list here. Okay, so that's the last, like I say, hopefully possibly the last one that we'll have on live on YouTube, but we'll be running them live next week, so make sure you attend, and I certainly hope it helps, and we'll look forward to speaking to you on Monday. Okay, so for those in the trading room, let's go and take a look at the markets in the trading room, and I'll speak to you later. Okay, hope it helps, and bye for now.